Hi, I'm David Stein of Money for the Rest of Us, and in this video, I describe how to better manage risk. Risk is something we deal with in investing as well as in our careers. I recently finished an excellent book by Alison Schrager. She's an economist, and the book is called An Economist Walks into a Brothel. In the book, she describes a three-step risk management process. The first step is to identify what the goal is. What is it that we really want? We'll often go about a certain activity and take on risk without having really defined what is it that we want, such as quitting your job because you want change without actually having some type of concrete plan. So the first thing is to define specifically what we want. And I'll give an example of that in a few minutes after I share the other two steps. The second step is, once you've identified what it is that you want, see if there's a risk-free option, an approach that you can take that you don't have to take any risk, and that you have high predictability of getting the thing that you want. And the third step is, if there's not a risk-free option, then is there an option that you can get what you want with taking as little risk as possible? So here's a couple examples. My sister and I are both selling our houses. She's in New Jersey, I'm in Idaho. We both got offers on our house. In her case, what she really wanted, step one, was to get a certain price. She had put a lot of work into redoing the house and she had a price in mind. That was her risk-free option. That is what she wanted. Now in my case, I wanted to make sure that I didn't have to keep this house all winter because we spend the winters in Arizona. So we both wanted to sell our houses, but what we really wanted is I just wanted to get the thing closed and not have to deal with it. She wanted to sell her house too, but she wanted a certain price. In her case, then, her next step then to get what she wanted was to counteroffer, to try to get more money. Whereas in my case, it was a solid offer. They were putting a lot of money down, and I was willing to take the offer. So defining what it is that we wanted very much impacted the approach we should take. Another example, more on the investing front, is retirement. What is the goal of a retiree? Well, they want their money to last throughout their retirement and to have enough money to live on. How does one go about achieving that goal? Is there a risk-free option? Well, putting most of it in the stock market isn't risk-free because stocks could fall 60%. And if the retiree was spending 4% of their nest egg each year and they lose half the money, then they're spending 8% and they're more likely to run out of money. The other choice isn't to be very conservative and put it all in cash or short-term bonds, because there it won't fall 50%, but it will not earn enough to, at least it's not going to outpace inflation. And as a result, there won't be any real appreciation. And again, the retiree might not be able to have enough money throughout the retirement. Now, what we don't know is how much is in that nest egg. If the nest egg is really large and you can live off earning, let's say, 2%, then it could be invested in short-term bonds throughout your retirement. But it depends on what you want. If the goal is just to make sure the money lasts throughout retirement, then you could do that. But if the goal is to grow it so you can leave a legacy, then you might be more aggressive in your portfolio. But both of those choices doesn't really focus on what the risk-free option is. If you want your money to last, then one option is to invest in an annuity that provides income for life. That's the solution that has the highest predictability, that you're guaranteed to make sure your money lasts. An immediate annuity, you work with an insurance company, you pay a premium, and then they pay a monthly payment throughout the rest of your life. Now, most retirees don't want to put all their money in an annuity, but it can be a foundation of one's retirement if their goal, the ultimate goal, is to make sure their money lasts throughout retirement. So when we think about managing risk, our first job, and Schrager mentions probably the most difficult job, is to clearly define the goal. What is it that we want? And then look around to see if there's a risk-free way, a highly predictable way that we can get what we want without much downside. And then if there's not, then we take as little risk as possible to get what we want. That's how we can better manage risk. Think about other situations in your life that you can apply these 3 steps. Have any questions or comments on this video, you can leave those below. And please subscribe to my channel. Thanks.